Good morning, Mr. Grider. How are you, sir?
I'm doing great. Great.
Good.
Happy Thursday. And I guess the government's reopening. And I don't know if to tell you, I got a personal experience. So, I was on vacation to go see my family on the East Coast. I live on the West Coast. And I'm telling you, I'm supposed to come back Monday.
Hmm.
And man, it was hard, man. Planes canceled, delayed, trying to get back. So I am one in favor, especially those if you travel. I am glad the government's going to reopen, right?
Absolutely.
And I was
Absolutely.
amazed. They can't hear us. Someone on the
Oh,
comments says you can't hear us.
yeah, no, our sound,
Oh, maybe we can get someone else to comment on
yeah,
that.
yeah. Anybody else having issues not being able to hear us?
I hear you.
Nope, that right.
Okay.
Okay, yeah,
All
maybe.
right.
Okay,
Thank you
perfect.
guys.
Thank
Thank
you,
you guys
guys.
for that. But one thing I was looking at is that, I saw some, I guess, posts today. There was like 1 million federal workers furloughed during that time. That's a lot. So I'm glad that they can get back and start getting a paycheck. Hopefully they can, right? Also on the news, you see that post on, hey, maybe a 50-year mortgage coming out? Crazy,
Saw
huh?
that. I saw, yeah, I mean, affordability is definitely
Yeah.
a big issue, especially with the younger generation, the young Zers, I mean, we're telling them go to school, get a degree, and then, go buy the house. So, they're saying, all right, I've done all the things. I want
Yeah.
the house now. And it's hard. It's
Yeah,
hard. It's hard to get into it.
I look at the average age of first-time home buyer is close to 40 years old.
Yeah.
That's
Hmm.
not like it was. And I still remember when I bought my first home, I was younger, in my mid 20s, and I went FHA, 5% down at that point. Again, my rate was closer to 12% just because I'm older, and that's where the rates were back then. But it's tough, right? But that's changed. So hopefully we can get the economy turned around. So given this webinar, I know the title's How to Avoid the Holiday Slowdown, but it's more into what do you do in a cyclical business that we're in, right? So we have cycles that are longer. Like you have like rates that go real low and you get a lot of transaction rates go up. Different things happen with the economy, and you have it throughout the 12 months, right? We all know that in December, January, February, they do slow down. And that's kind of the holiday slowdown we're talking about. And you got to understand part of it is, just the holidays. People are in school, don't want to do much, or look for new homes. They usually wait till the springtime to buy new homes. But also, you got certain areas of the country where people just don't want to go buy a house, right? You go to the extreme Northeast or Midwest up north where, it comes to January, the only activity that everybody does is ice fishing, right? They're not out looking for homes. So anyway, just to take a look at that, what can you do during these times to kind of improve and look at growing your business during these times? So that's kind of the thought of that. So glad everybody joined. Thank you for joining and being partners with us. So we'll just go ahead and start out here, Albert.
Absolutely. And as always, we want to thank you for your participation. And with us today, we have Mr. David Grider, who's our Senior Vice President of Sales. Thank you so much, Mr. Grider, for being with us. Myself, Albert Martinez, who's your corporate trainer here at Home Express. And our special guest today is one of our top RSMs here in the company, Mr. Rob Anderson. So glad to have you guys here with us. And yeah, just like Mr. Grider said, right, we want to prepare you not only for this holiday season, but also set you up for 2026, right? So with that, Mr. Grider, I hand it off to you, sir.
All right, thank you very much. And we'll kind of look at the agenda here. I'm going to first start out on this agenda just talking about, kind of some of the predictions for 2026, right? And kind of look at that. Then we're going to look at some best practices during slower times, right? Maybe look at some non-Q1 programs, just things way, then practical ways to find business in this area to kind of set yourself up for what I believe in the first probably Q2, we're going to have some rate relief going down, and I really believe that. I think with the new administration, we have the Trump administration. They're really kind of wanting us to get to a better rate environment, and I think that change will be made in Q1 as we're going into Q2, and the market kind of gets in front of that a little bit, so we'll start seeing I think, some rate movement down. So we'll kind of look at this and look what that predictions are. So we'll go ahead and start it out here and then kind of take some questions at the end. Okay, so let's look at some of the housing forecasts for 2026, right? The good news is they're most everybody's predicting origination increase. This is MBA. They're expecting to increase 8% in 2026 to 2.2 trillion. I still think it's a little bit lower than the average, but it's better than it has been a couple years. So that's the good news. And kind of the highlight here, Winto, is that I think purchases are going to be more stabilized to how it was in 2025. But you're going to see a bigger uptick in the refinance. And not only that, we've seen it here lately. We have empirical data. We're seeing the refinances tick up. And so I think we need to be prepared for that. And we have a webinar that a couple months ago of what happens on what's the denial percentage in the conforming world and how those can be adapted into the non-QM. But even without rates go down, especially those that took loans out in the last 2, 3 years, it's going to have some savings for them potential to capitalize on. So let's look at rates. What's the prediction on rates here coming up in 2026? Well, Fannie Mae is projecting 5.9% at the end of 2026, MBA 6.5%, National Home Builders 6.25%. Man, anywhere from high fives to low sixes. It's across the board. You know what? I think a lot of this they put out there just estimating. I think there's a lot of things that are going to happen in our economy. One is we're still doing battling inflation a little bit, but I also have the employment issues that we're going to have, and they got the two mandates. And so I think, given all that, we're going to have times where I believe we're probably closer to five, but overall, it's probably going to adjust and be a little bit more. So we got to be capitalized on that. But I think it's best, Albert, if we do a poll. Let's ask the audience here what they think rates will do in 2026.
Absolutely, Mr. Grider, couldn't agree with you more. I mean, looking at this slide, we see that, it's a little bit all over the place, right? Like, we really don't know. But let's ask the masses and let's see what they think, right? So, where do you think the rates will be in 2026? Do you think that they'll be higher than 5.5, or do you think that they'll be lower than 5.5? What say you, Mr. Grider?
Uh, I think it's going to be both. What I mean by that, I think it's going to have 3 to 5, maybe 6 months, higher than 5.5, probably in the low sixes, and you're going to have a few months where it's under 5.5. That's my so if you look at the end, it's probably a little bit higher than 5.5 at the end of the year, but I think you're do the Q2, Q3 range. I think it's going to be under 5.5. That's
There
just
we
my
go.
guess.
Uh,
Let's see
I
what they say.
Let's see what the masses say. So here we go. So the masses say higher than 5.5, 68%. Wow.
Yeah.
Okay. That's what they
Yeah.
think.
I think at the end of the year, I think they're right. I think we're just, it's just going to be up and down throughout the year. So let's take a look as how we prepare for, this, slower times and then how it's going to affect Q1 and what are some of the factors that are out there. Lower mortgage rates, generally they're saying it's lower. I think, if you're at 7%, it's going to be lower because everybody's like 6% is lower than 7, right? Stable but moderate home purchases. I do think it's going to be kind of the same on home purchases, 25 to 26, right? And we have to deal with the affordability, right? That's the slowed economic growth, affordability, um, and really the demand for homes is there if they could afford it. But since they can't afford it, the demand has gone down. But their increased refinance activity is going to be the main driver behind the forecast increase in origination volume. And hopefully we can all take part in that and increase our business in 2026. Let's go to kind of the best practices here. And I'm glad I have Mr. Anderson. Mr. Anderson, I've known him for 30 years, I think, somewhere around there. But part of his expertise, and he does, is he knows how to kind of set himself up and to look at different things, how to get new business, how to increase knowledge. So when I look at stuff that you do in short times, update your knowledge is power, right, Rob?
Oh yeah, it's definitely power. I mean, one of our the owners of one of the largest brokerages was just talking about this, how people would rather hear from somebody that educates them or counsels them than someone that's just trying to sell. So the best loan officers out there are educating and counseling their clients rather than selling them. There's several ways you can do that, learning, getting more detail on all the products available. I mean, everyone's done agency and govy loans for years. Non-QM has become more impactful in the last year or so, but there's still a lot to learn about it. So, I always suggest getting with one of our knowledgeable AEs to learn more about our products. And then we also have some great videos available that your AEs can lead you to also. We do webinars. I mean, there's so many different sources to learn more about non-QM out there. So it's a great time to expand your knowledge on that. And then deepening your expertise. Knowing when to maybe put somebody in an arm rather than a fixed, knowing when a non-QM loan would be better than an agency loan. There's all these different ways you can go. And then sharpening your skills, take advantage of all these pro lenders out there doing webinars, or even Fannie Mae and Freddie Mac are constantly educating. Uh, Take advantage of those. Use some of your downtime to train yourself and to just become more of an expert. Also becoming an expert in your local market. Really, really get with your real estate agents and learn what's going on in that market to be an expert.
Hey, thanks, Rob. That's good advice. Knowledge is power. It is. So
Yeah.
let's take a look at strengthening client and partner relationships, right? I look at this as during the slower times, man, you have time to kind of re-engage, kind of look at your database, and nurture relationship. This is a relationship business, right, Rob? It's like
Oh yeah.
you need to be personable, right? People do
Yeah.
business who they like and trust, and this is part of that, of making sure you're doing your part, because we rely on you. We're grateful to have you guys as partners, right? And
Yeah.
this is kind of what we do out here, and we're here to help. And if you do that same thing with your clients and partners, I think it works out. So go ahead, Rob. I want to talk a little bit about partners and relationships.
Oh yeah, this is one of the biggest things this time of year is just reaching out to your partners and thanking them. I mean, you've done business with them this past year. It's been a good year. Reach out and thank them. I sent a thank you email to one of our top brokers last week, and she responded within 15 minutes. If I send out marketing, I may have never gotten a response. So just, starting that tagline, thank you, will really open some doors. And then deepen your relationships with your partners. Take your agents out to coffee. Take some really good clients out to lunch. Learn a little bit more about them personally, about their families, what's going on. People love to talk about themselves, so take the time to get them on the phone or get them out and just learn more about these referral partners that you're working with. And then providing exceptional service. It always amazes me that it seems like from Thanksgiving to the end of the year, we kind of assume that people are just going on vacation. Well, that's not the case. Be that one loan officer actually reaching out to your agents or reaching out to your referral partners and letting them know, hey, I'm still open for business. Sure, we all need a vacation, we all need time off at the holidays, but on the days that you're not out with family and friends, take that time to reach out to these partners and let them know that you are available.
Yeah, thanks, Rob. That's some good advice. All right, let's go to the next one, and this is going to be on optimize your business processes. And I'm going to tell you, this is something we do at Home Express. We recognize we're not perfect. We aren't. No one really is. But the one thing I tell you is we look every day of like, how can we improve to make our service better, to be a better partner with our relationships we have out there, and we look to improve that through technology, through just doing different things in the processes to help our partners out, close loans faster, on time, and make sure the products are out there. So I think as far as all us individually, we need to do the same thing in our own workspace and where our environment is, right, Rob?
Oh yeah. Yeah, setting up a routine is huge. I mean, we all know that this is an industry of fires and we tend to gravitate to put out those fires, but we do need a daily routine. Consistency is key in this business. So if you have a consistent routine every day where you mark out, a couple hours to contact new leads, a couple hours to get with your referral partners, and a couple hours to focus on your pipeline, you would be amazed at how far that's going to get you. Then refining your systems. I mean, there's so many CRMs available out there. If you're not already using one, maybe look at implementing one or just taking what you already use, like Outlook, and figuring out how to use that better as a way to contact your referral partners.
Excellent. Thanks, Rob. The next up, we're going to look at generating new business during the slow times, right? And I think that's what you're going to do. We all need to strategize. You know, if we're in the sales business, financial sales business, it's like, how do we market? Now, I'm one to believe in this day and age that if I'm a consumer sitting at home and I want to go buy a house, what's the first thing they do? I'm going to go to the internet, then look at reviews done on businesses, all those type of activities. Are you set up for that, right? Are you looking for those new opportunities? I think the social media has really taken over where people kind of go to that and,
Yep.
look at the customer service you provided in the comments on that, right, Rob?
Oh yeah, that's big. And speaking of social media, I was talking to a top producing loan officer in Northern California that does a ton of social media marketing. And he said he gets way more feedback on posts that are not industry related, just because he's kind of sharing more about himself and who he is as a person. So try and add that in too, share a little bit more of what you're doing daily or maybe what your family does on the weekend. Just be a little bit more personable because we all want to work with someone we feel comfortable with, we trust, and maybe even feels more like a friend. Uh, and then a couple other things that I see more of, especially at this time of year, is you can offer promotions, within RESPA guidelines to help get more calls coming in. Maybe work with realtors on how you can do that. And then we'll get a little bit more into this, but looking for new opportunities. I mean, really, this time of year becomes more of a buyer's market because the people that are listing their homes definitely have a need to move, whether it's, moving out of state or, you know, unfortunately, there's financial issues. But now is a great time for buyers that have been waiting to finally find that dream home. Now could be the time to do that.
Thanks, Rob. Next, let's look at some of the programs in non-QM. And this is not, this webinar is not about going in a deep dive in programs. I just want to cover what you can reach out to us or to your highly knowledgeable account executive to set up a time personally or with your team to kind of go over what I call kind of the 70% of what non-QM loans are about. And that is about the self-employed borrower that doesn't work out on the tax returns, right? Lots of different things, but they make good money. They have great assets. They might have side gigs that they've been doing for a few years that income is not going to be used in the conventional world, but we can do that in non-QM. And then the
Yeah.
investor programs, and that's for your small to medium investors that are looking for opportunities. Now, I know not if you go across the country, you kind of look at there's some areas where cash flow might be an issue, but there's other areas where cash flows still work. And they're pretty savvy on that. If I look at somebody in the investor world, I mean, you're looking at their portfolio. You want some in stock, some in bonds, some in commodities, and some in real estate, right? And so as you look at that portfolio, they might want to mix it up a little bit. Sometimes I've heard some that said, "Hey, I need to, kind of take some profit off the stock because stocks have really gone up. Where are you going to put that money?" And they're probably looking at some cash flow properties that they can hold on to, right? So these are some of the things that we want to help you guys get more knowledgeable on and how to do that. And then we're going to look at, later on here in the webinar, where to find these, right? So that's really
Yep.
good. So this is just a real high overview of the typical non-QM loans that are done today. We'll go to the next slide, just kind of briefly go over it. Again, we have streamlined guidelines here to really make it easy. Typically all you need is 12-month bank statements. We'll look at the income in advance, you just upload. You can do it all once through our portal. It goes right to our underwriter income desk. Here's the income you can use. We have specific expense factors you can use or tax preparer letter if you choose that way. We're trying to make it very easy for you to use our portal, Exonet portal. that you can get answers right away. We're transparent. It's available 24/7. So really good technology behind that with some other tools. If you go to the resource center, we'll have some information for you too that you can learn about. Next, we'll kind of look at investor loans, and that's your business purpose. And I'm not going to go over this in detail, but again, very streamlined guidelines, right? Lots of different ways to get those deals done. You can still do bank statements on those loans to get a better rate, or you can just look at the cash flow. And again, these are streamlined guidelines for you guys to close these loans and make it kind of easy for you, kind of the speed, ease, and convenience motto that we have at Home Express. All right, so let's look at, this kind of chart here, Rob. I was talking to you earlier, and you kind of, kind
Yeah.
of went out to your partners and said, hey, you don't have to be licensed for in certain states to do business purpose. And you had a lot of our partners go out there and increase their business this year.
Oh yeah, it's we all know that rates have been in the on the higher end, and so the business has shrunk a little bit. Well, this gives you the opportunity to go out, work with real estate investors, or maybe someone who wants to be a first-time investor, especially in areas like Florida, Hawaii, the coastal areas, Colorado, and the ski areas. People love vacation homes. We'll turn those into short-term rentals. We all know the cost of hotels has gone up substantially. So short-term rentals have become a really big part of the industry. So yeah, we're able to help these loan officers that were struggling a bit, maybe even looking to get out of the business, find a new way to get their pipelines growing again.
Awesome, Rob. And everything on this picture in the dark blue is states you don't have to be NMLS licensed to do business purpose loans. So again, this is things we can share with you. Again, connect with one of our highly trained account executives. We can go through this whole thing with you personally or with your team. You know what, Albert? I think we need another poll here. We've been going for a little bit. What do you think?
I couldn't agree with you more, Mr. Grider. So, we kind of started talking about, the 50 year, it's something innovation, right? Or we're trying to spark something up. And what do you think about the 50 year? Do you think that it'll be a game changer in 2026? Yes, no, absolutely not. What say you? Let's see what the masses have to say.
Yeah, I'm probably a little on the no side. It's almost like it's a generational loan. But you know what? We have an affordability program problem right now. We really do, and kind of thinking outside the box. I know with non-QM, you have the interest only option, right? That's kind of a 40-year loan, right? That you
Yeah.
have out there, trying to make it
Mhm.
affordable. For the right reasons, it's probably good, right? I'm hoping they can qualify on a 30-year, but then elect for a 50-year so they can save money to have that flexibility. But I don't know. I would say no, not absolutely not, but let's see what the audience has to say. Yeah.
Majority says no.
Wow.
So between no and
Everyone's
absolutely
against it.
not, yeah, a few people thought yes that it was going to continue.
Yeah, that's interesting. I don't know. I mean, there's some long loans out there in other countries as well, right? The 50-year, or you go to Japan, I think they even have a 100-year. I
Yeah.
believe,
Yeah.
right? So it's crazy, but you know what? It's kind of the culture. Our culture is kind of get the 30 years kind of standard. You can get the interest only, but I think there's probably for the right person, right reason, it could work out.
I was reading something about it. They were talking about, people who are very, very wealthy, that they might utilize that tool as a method of passing it down, to inherit and avoiding, high taxation, utilizing the 50-year mortgage. So as a thought,
No,
right?
I think, everybody has a different position and, their own independent financial position and their goals to meet. And it might be for the right person,
Hmm.
right? Is it going to be a game changer? I actually agree with the audience. No, it's not going to
No.
be any great game changer, but it gives flexibility, right?
Yeah.
All right, let's get into practical ways to find self-employed borrowers. I'll kind of let Rob talk a little bit about this because this is something that he
Mhm.
actually trains on and does a lot of webinars on with him and his team. So Rob, I'll let you kind of go with practical ways to find self-employed borrowers.
Yeah, I'm just going to highlight a couple because we've touched on a few, but Number two, traditional lender fallout. So make sure you're meeting and talking to loan officers that work at the big banks or credit unions. A lot of times they don't have an option for a bank statement program. That way they have an opportunity to refer their good clients out so that client can then go ahead and get purchase that dream home they've been wanting. And then builders usually will have already have their own either lender or um, lender partner, but even those lenders don't have the opportunity to do bank statement loans. So builders want to move inventory. They want to get the homes sold. So make sure you're talking to the sales agents at the model homes to let them know that you're an option if maybe one of their buyers has no longer has financing. And then CPAs are a great resource. Who are they working with? Self-employed people. They're a great resource because they know if that they talk to their clients all the time and they know what's going on in their personal life. So it's a great networking CPAs. And then just your go-to people. You know, you're talking to self-employed people in your own business or in your own home every day. Housekeepers, pool people, plumbers, appraisers, contractors, you name it. You're talking to someone self-employed every day.
Thanks, Rob. Let's take a look at practical ways maybe to find the small to medium investors, right, that want that, right? So, Rob, I'll let you just keep on going. You're doing a great job here.
Yeah, again, I'll just highlight a couple. I see a lot of these private hard money payoffs coming in. These are usually short-term loans. A lot of times they're interest only or have a big balloon payment coming due. We can refinance those hard money or private notes and put that investor in a better position so that home is now cash flowing better. So look for those hard money private lenders in your area and see if they have loans that are coming due that they want to get off their books. And then financial planners, especially at this time of year, people are kind of reevaluating where their money is going, and a lot of them want to diversify and then put some of that money into real estate. So look, talk to financial planners, create some kind of referral partnership, and they'd be glad to hand you some of their clients when it's time for them to buy some real estate. And then doing investment seminars, especially on short-term rentals. It's a great way to show realtors how they can also get more business.
Awesome. Thank you, Rob. So I'm going to take this on another sheet just for options, and I think this is good. We're talking to banks and those type of things and that we can do, right? So we have options, right? This is probably not even all that we do. This is a very small amount of what we do, but probably the main ones, the 12-month bank statements, the asset programs used for income, 1 year full doc, and we're okay on life events, right? That are taken care of, right? So they had something that happened in it credit wise, but they're back on their feet. We all know that happens in real life. So those are the same those options of why they get turned down from conventional financing, and then can come into the non-QM and actually help their families out with their refinance or the purchase of the new home. Okay, so the other thing too, we're going to look at some recently expanded programs that we now offer. And so recently we expanded out to the 5 to 8 units as a DSCR loan, right? So some of the parameters are here. So just more options for you. If you see a small to medium investor, hey, they're looking for a 4 unit, but they found this 5 unit that cash flow or whatever has that, still have an option to get that done, right? So there's just some criteria in that. So there's something that we do now, and that we'd love to partner with you on looking at those deals to get those closed for you. The other thing we introduced this year is our non-delegated correspondent channel. And if you're interested in that and you like to be in house with non-QM, we've seen that movement, Rob, right, the last couple of years where, they probably most of them have some type of non-delegated correspondent on the agency side or even fully delegated. And they were kind of hesitant, a couple of years ago to go in the non-QM, right? But this has really taken off in the last couple of years. We'd love to have that. The benefits are there. You're the lender, flexible in pricing, and we have a program that's limited limited risk. Rob, I don't know if you have some comments regarding that.
Yeah, we're seeing the kind of market kind of move that way. It's just a great way to be more flexible. And as we continue to enhance it, it's going to really make your business more efficient if you choose to go that way.
Excellent. All right, so now we're up to any questions. I did think a post in there. Everybody that registered for the webinar will get a copy of the deck and recording, and it'll be on there, right? So this will be actually last webinar. Usually the one in January 26, I usually do more of a forecast, and we'll talk about some of the programs that will probably be highlighted in 2026 from our estimation. So that'll be on there in 26. But Albert, I'd love to take any calls or any questions that we have from the audience.
Yeah, thank you for that, Mr. Grider. I did thank you. I did see a couple of the comments asking about the recording and the slide deck, and just like you mentioned, we do post this recording as well, as we will send out a copy of the slide deck. And then obviously, if you always have more questions or you want a one-on-one, Mr. Grider's information is available, and you're always you can always reach out to him, and I can attest that he always picks up the phone. So we do have a few questions here. So what with the holidays, how do holidays affect interest rates? What do you think, Mr. Grider? How will they affect interest rates?
Well, that's a great question. There's a couple things. So our industry is based on, probably the securitization market and those type of things. So as most of the bond market, starts the beginning of the year, they kind of fill up and they may not have as many high demand for those bonds, right? So if they have less demand, the rates kind of go up a little bit on that. But I also think that the margins from interest rate movements from the Feds and those type of things are going to have an effect, and there are going to be predictions once we get some of the Bureau of Labor statistics and all those stuff come out eventually. I think we'll see some on that. I don't know if Rob, you have some comments on that, but typically towards the end of the year, it's very flat, and sometimes it
Yeah.
goes up a little bit with no reason that other than the demand for the bonds goes down and or for the issuance of those.
Okay. Next question is, do title companies and escrow close on the holidays?
Well, I think most major holidays they do. And usually, like the day after Thanksgiving, day after Christmas, they're very short staffed. And that's such a good point to make is that you have your clients, you want to provide exceptional service. So that's part of your knowledge base that you kind of need to know. So when you have a borrower, probably one of the first questions, when would you like to close? And then you kind of forecast what you need done. Obviously you need appraisal, right, and get all the conditions in and get it submitted, and then pick the date and really work with your account executive for that target date, right? And kind of know that as you're coming up towards, November 25th, that's problematic if you're trying to close right around that day because there's a lot of people involved, right? So not only have, yourself, the borrower and their plans, the title company, the notary, the staffing that are out there. There's a lot of moving parts, lots of people involved in every transaction. So it's better to try to get it earlier and kind of anticipate that. If it's right around that time, the expectation be it might fall into the next week, right? And so it's all that communication you need to do, and that's providing excellent customer service based on your knowledge you have out there.
And you
And
also
kind of
see that gridlock towards the holidays. So you want to avoid the gridlock because you could get pushed back.
Yep. Yep.
absolutely. So, kind of following suit with that, as far as what's being asked is Home Express as a company, will mortgage transactions be delayed during the holiday months?
I always tell this, we move as fast as you can, right? We have really good turn times, right? So it's really not us. Of course, we're closed on the holidays, but we go the extra mile trying to get the deals done. It's typically get your conditions in. That's what we're waiting on, right? It's like, hey, okay, I need the VOM or whatever. I need the paycheck stub or the last bank statement. Those type of activities that, man, if I could do anything this time is get conditions in early. We'll work hard on that and getting that closed on time for you. But we don't have really such a delay. It's like some of the delays I always say, that's when I get asked, well, how fast can you close a loan? I always ask them that question. Well, how many COCs are going to be processed? Right? Because that slows it down. Now I'm changing the terms, right? Now I have to redisclose. I got to do all these different things. So the more you have dialed in early of what that loan terms of the borrower is requesting, and again, it can change. We get all that, and you're waiting for the appraisal to come back. Well, if the appraisal changes, you do all that. So kind of dial that in as quickly as you can, and it'll close quickly with us.
Awesome. And it looks like the last question that we have here is, why would it be smart to close a loan before a holiday?
That's another great question. One is, well, what is the need of the borrower? What is their expectation? What do they want? That's kind of where I start, right? But if you have a long weekend and they don't have access thing, you look at, hey, maybe they're paying too much interest or prepaid interest. So you got to look at that, but it really depends on the borrower and how you're talking to the borrower and what they want to do. We want to make sure we want to exceed their expectations. So if you take an application, part of the question would be, when do you want to close, right? And then kind of go through those. This is what happens to close at this particular time or day. And so you kind of work it from that angle, I think is the best. I don't know if Rob, you have some comments on that, but that's kind of where I always start. When do you want to close,
Right.
right? Got an application, it's good. When do you want to close? And I want to exceed that expectation, right? At least have the
Yeah.
ability to, right?
Yeah.
Awesome. We do have a question here. It says, what are your thoughts about integrating Vantage Score from Experian, Equifax, and TransUnion?
Well, it's going to happen eventually. It's like so it's inevitable. I think it's going to be fairly easy transition. I really do, as the scoring system moves over, right? And again, I'm more. I guess I could say I'm old school. And there's so many credit repair places and those, and you got to score this kind of stuff that goes on that you kind of just have to look at it, right? How long have they had trade lines? How they pay their housing? And then what obstacles did they have? Did they overcome that? They're back in a good spot now. I think it's going to be an easy transition into 2026 as we move forward.
Awesome. Thank you for
Yeah.
that. And that seems to be all the questions that we have right now. Do we have any closing words that we'd like to leave everyone with, Mr. Grider?
Well, just thank you for a great year of 2025. I mean, I'd look at from COVID until now, it's just thankful. I'm very much thankful for all of our partners out there that we have that we've known throughout the years. This is 10 years we've been in the non-QM space, and just grateful. I really am really grateful for that. And we're here to help you, right? So reach out to us if you got any questions or like some further training or just on programs, just want to talk to us about how to use the portal and all the tools, man. We're here to help you. Enjoy the holidays, and we look forward to even better 2026. I think the overall market in non-QM is still growing, and it's even going to grow as a bigger percentage of the business in 2026. So I just want to thank
Yeah.
everybody just for the past 10 years. And we look forward for another 10 years.
Rob, any as our special guest, do you have any closing words, sir?
Yeah, I want to reiterate thanking our clients. It's been an incredible run. And I just want to encourage everyone to reach out to your AE to set up some training, or if you don't already have an AE with us, contact Dave or myself, and we can set you up with an AE. But our AEs love working with loan officers and helping them increase their market share and increase their pipelines.
Awesome. And with that, thanks everyone. Have a wonderful rest of your day and happy holidays.